Hello, everybody. Welcome to Rebuilder PG, where we talk about the restoration industry here in South Florida. My name is Rafael, and with us today, we have a special guest.
Perfect. Well, Rafael, thank you very much yourself and PG Restoration for having me here. My name is Claudio Rubiera. I'm a senior vice president at Brown and Brown Insurance Services. To give you a quick background about who we are, what we do is we're in the commercial insurance and surety business. So we work with contractors if that's new construction or restoration, repair, remodel, etc. We specialize mostly in construction. We have real estate division, etc. But that's what we do. A little bit of how I got there. I was studying business at Barry University with a major in finance. I wanted to go into the business world with a focus in the financial part of it, and very similar in our business in insurance. You have financial components, risk management, etc. So I found the insurance industry and Brown and Brown specifically. I played baseball all my life, and I played baseball at Barry, and we do a good job of trying to recruit people that can be good assets to our team, and then we can teach them the insurance surety part of the business. So they were recruiting for basically folks like myself, and they were targeting student athletes, and that's how I became an intern first. My last year that I was getting my degree at Barry as a finance major. I was an intern at Brown and Brown, and then I became full time. I worked as a tech associate, and then became into what I am now in the consulting side of things. So I work with contractors, subcontractors on the consulting of their insurance and surety program, if you will. So that's a little background of who I am, who Brown and Brown is, and how I got to this great industry and company.
So you're saying this, so they look and for the hiring process, the company looks for specifically qualities of like your personality and how you are.
Exactly.
And then like we'll teach you the business
Yeah.
aspect later, but
Correct.
I want to see like what your base is what kind of person you are.
That's exactly it. So we have seen success in people that, and not everyone's the same. And people that want to learn and want to grow and have that work ethic and have the qualities that we're looking for, the dedication, determination, time management, all those things are important in not just insurance, but in construction,
Right.
in finance, in whatever industry it is. You got to find the right people. And we look for the right people, and we have an established training program as one of the largest insurance and bonding companies in terms of agencies and brokerage firms, not just in Florida, but in the world. We have the ability to teach them what they have to know about insurance and bonding, right? So we try to find the right people that fit, that have those characteristics and qualities that we're looking for. And then we teach them on the professional side of what we do and how we do it. And we run them through our training program.
That's a really interesting way to I guess recruit, because so many people are focused on, okay, do you have the technical skills? Do you have this degree or this certification? And then you get somebody that has the knowledge, but their attitude is kind of maybe poor, brings
Mhm.
down the whole team. And at the end of the day, you just detract from your services.
Yeah, Rafael, you said it best. You can have the right, technical skills and knowledge, but if you don't put it to use, then unfortunately, you're not going to be someone that's going to be a good,
Right.
employee or teammate producer for that company. And you have to maximize people, and people maximize themselves when they have the interest and that work ethic and everything else. So we've seen how people that may not be maybe have the most technical skills, but we can help them with that part.
Hmm.
We can have the right people join our company and our team, and then we can teach them everything else that comes with it. And they become really good producers in terms of what they do, teammates, service members.
Well, Claudio, we always like to talk about how, when we bring our guests over, like how what you do and what
Hmm.
your company does ties into construction, ties into concrete restoration,
Hmm.
because it's a big industry here in Florida.
Sure.
Every time you go to Miami, there's 5 different cranes building something
Yeah.
new. There's scaffolding all over the place, repairing old buildings,
Yeah.
historical restoration. So you said you're an insurance company,
Hmm.
and then anybody's ever dealt with a contractor is like, oh, let me get your liability and workers' comp. But that's just words they throw around. What does that really mean? What is liability? What is workers' comp? What does it do for us, for the client? Can you go into that a little bit?
Sure. So first off, as an insurance company, we are the broker or the agent. Then you have the actual insurance company that pays claims, that provides the servicing of anything that has to happen throughout the year with coverage and whatnot. But we're the intermediary. So we are, that's what we say, and we're not, there's different ways to look at it. You have like the transactional part of insurance, and then you have the consulting part of the insurance and bonding, side of the things. So we look at ourselves as more as a consultant, even though, yes, we do place our clients' insurance and bonding. But basically, we are the intermediary between the contractor or subcontractor and the insurance company. And part of what we do, as I mentioned, it's commercial insurance. So that includes property liability, umbrella, excess, liabilities, workers' compensation, commercial auto fleet, etc. Equipment floater if you have equipments to insure. So we do everything, we place everything when it comes to the insurance side. Now, within that, we have to find a way to separate ourselves from everyone else out there. How many insurance agents or brokers do you know? There's tons, right? But we're a very specific type of firm. So in construction, it's it's driven by contractual requirements and obligations. You have a contract that you sign with your owner, or if you're a subcontractor with your general contractor, and you're obligated to meet those requirements. And we go very in depth when it comes to the insurance, because you are, when you sign that contract, if it's not your contract, if it's your customer's contract, you're being obligated to fulfill these duties. So what we do is, before, and we tell like PG Restoration, when you have a new contract coming your way, I say, hey, Rafael, Blas, Julio, send me a copy of that contract. We want to review the insurance requirements, the surety bond requirements, and then give you feedback, recommendations on how we can best place it for yourself. Because at the end of the day, when you sign someone else's contract, you're going to probably be at a disadvantage. And I actually learned this from a construction attorney. He said there may be 20 things, just to give you an example, 20 things that we want to amend or addendum in a contract to be more
Right.
favorable to us and our customer. But the truth of the matter is, owner or the GC, if you're a subcontractor, he's not gonna say, yeah, don't worry, we'll make all 20 changes. They may accept 8 changes, but you know what? At least now we're at a better position if something does happen, that the customer is better protected. And that goes with the insurance and surety side as well.
Everyone wants the contract to be on their side,
Correct.
right? To
With
have
we
favorable
always,
terms.
yeah, which we always recommend that if you have your own contract that's been reviewed by your legal counsel and your insurance consultant like ourselves, you should have, if possible, the customer sign because you know what that agreement has. If it's another
Correct.
agreement that you're not familiar with, now we got to review it, break it down, and see where we need to make those changes to place you in a better position if, God forbid, something does happen, in that project down the road, that you're in the best position, that it's more favorable to you and not to the other party.
More often than not, we end up sending the owner contracts.
Mm-hmm.
Oftentimes, the owner just doesn't want to deal with it. Like, send me a contract. I'll have
Yep.
my attorney look at it, and that's it. And luckily, we use the AIA, the American Institute of Architects.
Mm-hmm.
They have a very standard
Mm-hmm.
short form. They have a long form, and they have a short form contract, which works, especially in concrete restoration, where you're
Mm-hmm.
not making a high rise.
Correct.
The short form works great. It's pretty standard. It's great language for us, for the engineers, for the
Mm-hmm.
client, because we're making a contract not just with the client,
Yeah.
but with the engineer that's been hired by the client.
Correct.
And there are oftentimes, we see this, there are engineers that it's not a contract, but when we get the bid sheet from the engineers, in there are contractual clauses for insurance.
Mm-hmm.
There are engineers that request a specific umbrella amount,
Mm-hmm.
or maybe a specific auto insurance.
Mm-hmm.
So one thing I wanted to ask you, just a really high level,
Mm-hmm.
what is the difference between your standard liability insurance, its coverage, and then why would you want to get umbrella?
Your standard liability insurance is called the general liability. So that covers your general operations in terms of if you cause a third party any bodily injury or property damage, that's when your policy responds, of course, according to the terms and conditions of your policy. Because that's one thing that I do want to also address. When we start to work with a new contractor or a subcontractor for that matter, we want to review their current program. The reason why, it's because you may say, yeah, I have my general liability. Here's my certificate. It's a 1-pager. What you don't know is that general liability policy, and we did this when we first started working together, could have 50, 75, 100 pages, where then you have a bunch of endorsements, forms, exclusions that may limit coverage or exclude coverage in the future event of an unfortunate claim. And you don't want that to happen. You want to know, what your policy is covering and what it's not covering, so then you know what your exposure is. But going back to the general liability policy is the primary or the standard liability policies for contractors. Then if, let's say, an owner wants to say, look, and let me take a step back in it for a second. The limits, the standard limits of liability for the general liability policies is $1 million for each occurrence and $2 million of aggregate for the policy period. So you have $1 million for any claim or occurrence, and a total of $2 million for the entire policy period. But the owner may say, this is a nice condominium association. This is a nice historical building. You could cause damages that are greater than $1 million. They may
Right.
require you to protect themselves. They may require you to carry an excess liability or umbrella policy. And that policy sits over the primary general liability policy. So for the sake of the example, if you have, a million, 2 million in terms of general liability
Right.
policy,
Right.
and you have a $5 million excess liability or umbrella, you have a total of 1 million plus 5 million is 6 million for each occurrence. And then you have 2 million plus 5 million is 7 million for the aggregate of the policy period. So it's really a requirement that is uh, pushed from the owner or the general contractor if you're a subcontractor,
Hmm.
and it's really derived by the owner and what their attorneys think is best for their specific property and their building. And I wanted to address one thing that you mentioned on the when you give your own contract to your customers, which is very
Right.
it's favorable to you because you know what's on that contract. It's been reviewed, etc. So in the concrete restoration space, we see most of that happens because let's say you're working with condo associations for the most part, 'cause that's what we've seen, and we'll
Yeah.
probably address that here shortly, but they don't have a construction agreement in place. They don't want to deal with it. They just say, send me yours, we'll review, our attorney will look at it and approve. Perfect. We're now in the flip side in terms of new developments when
Mm.
you are building ground up, brand new, tower in wherever downtown Brickell, wherever it's at, they're going to have their own, agreement in place that's been reviewed. It's
Right.
more favorable to them. But for the concrete restoration side of the business, it's more favorable to you because you have that agreement that most of those associations, for example, do not have a standard one in place. They'll just use a one for the contractor. So, so it depends on what you're doing,
Right.
new
Depends on the
construction
industry.
or restoration work.
Right.
So,
Right. I mean, I like our end of the thing, but luckily the contractors, I think they're pretty fair. Most of the time, the only things that they kind of go back and forth on are usually like maybe the insurance requirements
mhm.
and liquidated damages.
Yep.
So that number always fluctuates up and down.
Yeah, which the liquidated damage is also part of the surety, when I know but we have when you're about to go ahead and issue the final bond request form, we have a form. It's one pager, and that's one of the questions because the surety has to know that's something else on the surety side of things. It's a guarantee. So you have an owner that wants to guarantee that that project is going to be
Yeah.
fulfilled
Yeah.
as what the contract has, that you as a contractor, you're going to perform the work. So you basically have performance and payment bonds for the most part that are required. You're going to perform the work and you're going to pay all suppliers and subs, and the project will go smoothly. So that's when they require a bond. It's a guarantee. And that's one of the things that the surety companies and we asked for is we need to know what those damages are.
Right.
How many days? What's the amount per day? Because that can really put you in a position where
Yeah.
if there's unforeseen events that happen, you could be out a lot of money that
Oh
could dip
yeah.
into your bottom line. And now guess what? That project is no longer profitable. And we don't want that. And the surety company doesn't want that to happen.
I mean, we've seen as low as $100 a day. I've
Mhm.
seen some as high as $1,000 a day. And then if you go over a week, and they don't discriminate on weekends.
Yeah.
Weekends count.
Yeah.
So
The lower the better
yeah,
because then that
obviously.
you're less exposed
Yeah.
to,
Yeah.
the damages. But
We see a lot of high ones in hotels,
yeah.
especially if you have to close down a portion of the hotel
Mhm.
because then they have a monetary they're losing some kind of value from that for every day over the agreed contract
Yep.
length. So that we'll see the high ones there. But
Mhm.
quick question: so for our viewers that may not know what exactly is, can you explain to them what is a payment and performance bond?
Yeah. So, well, first off, a bond is a guarantee. You have basically three parties that are involved: the person that's obligating you to get the bond, which would be your customer, the owner. Then you have the actual person that's going to hold the bond, which is the contractor, and then you have actually the bond company, or what's called the surety company, which is the insurance company behind it. That if the contractor does not perform, in this case, or make the payments as of what the contract states, they step in to pay any claims.
Mhm.
First off, and this is something that's very important, insurance and surety are totally different. In insurance, for giving an example, underwriters underwrite for situations to have claims. They have their actuarial information where they say, okay, given what you do, what type of work you do, we have it through our systems. I'm estimating that you're going to have these claims. That's why I have to collect this premium. Well, when it comes with the surety, the bond side of it, if you have a claim, it's not a good situation to be in because it's going to limit the ability to get bonded in the future. Most of the bond companies will work with you if, let's say, something arises. They're going to figure out a way for this job to be completed. Sometimes it's unfortunate, but there has to be a loss of income sometimes to the contractor, but it's better than not being able to
Get a bond,
perform
yeah.
any other, because every other large job, and we've seen this more, it was always a public requirement in terms of public jobs. But
Mm.
even the private stuff now,
Oh,
every
yeah. Oh,
large
yeah.
job requires it because
Yeah.
guess what? It is a guarantee. And again, as I mentioned, it's the payment bond and performance bond that are guaranteeing that this project will be finished as per what the contract states, that the contractor will go ahead and perform the work as per what the contract agreement states, as well as pay their subs and suppliers. So then there's no situation with the owners saying, I got a situation where the GC didn't pay so and so supplier, and now they're
Putting
putting
a
a lien
lien,
on my
yeah.
property. And now that is
Yeah.
what they're avoiding. It's really guaranteed. And as any contractor gets into larger jobs, and if you're in public, it's
Oh,
required, but
mandatory.
larger private jobs, they will require
Yeah.
bonds and they will require higher limits for excess liability and umbrella, etc. But that's kind of a snippet of the side of the bonding.
Yeah, I don't think we've done a job in the last 4 or 5 years that have not required a payment and performance bond,
Yeah.
so and we don't do public,
Yeah.
very rarely, so it's almost always private sector and everyone's requiring a bond.
Yeah.
Anything, you go beyond $200,000 for a contract, bond's gonna be in place half the time.
Correct.
So basically what you're saying is like if let's say we fail to pay our subs and
Mhm.
then our subs start trying to put a lien on the property for some reason, then the surety company would come in and kind of handle that on behalf of the owner, the
Correct.
payment for the sub.
Now, that is in a situation where the surety company has exhausted all the options because
Okay.
they are guaranteeing you. That's why they require tons of information, financial information to say, okay, I can put my risk with this contractor because I have the financial reports that's showing that they can do this job. And when you are guaranteed as a surety company, you are guaranteeing the performance and payment for the contractor. They're going to go ahead and basically take the assets first of the company. They will exhaust all the, if there is a claim that's not going to be handled by the contractor, they will exhaust all the options possible when it comes to the assets of the company before they step in and pay the rest of it or find someone. Let's say if the job isn't complete, they got to find another contractor to finish the
Right.
job.
So the
They got
contract
to pay
falls
that.
off the face of the earth.
Basically, if you have a claim as a contractor, you're going to have a hard time continuing, especially if you're trying to grow. That's what we always focus. And, we push the fact of we have to have an open line of communication with our customers of what are your growth plans, so we can make sure to get ahead of that and start talking right now to the surety company about what you got to do to increase your program. Right? Let's say you're trying to go after larger jobs. What do we have to do to increase that program? Let's get the contractor ready. So by the time that they start getting these jobs, they're approved, they're eligible, they are good to get the bond. If not, then we're gonna have a situation where we have to be reactive and try to find a way to get it done. So we always recommend that keep us, and we want to also create the contractor, us, and the surety company and underwriter in a symmetric relationship. We want them to have full access to you. You have full access to them and saying, what do I have to do to grow my bond program? I'm trying to go after larger jobs. What do I have to do? And we
Mm.
want to make that, partnership so that everyone's on the same page.
So are the limits for the bond similar to the limits for liability insurance where you have a per incident and then a per period?
Correct. You have a limit of how much the pre-approval process
Mhm.
of the surety as per the job's completed and as per your financials, what they're pre-approving you per project, and then for any one time that you could have in terms of projects that are ongoing and aggregate. That's based off of though your performance and your history and your
Right,
financials and the
right.
bonding side. On the insurance side, it doesn't matter how large you are, most of those limits are standard. $1 million for each occurrence, $2 million of an aggregate, and then you buy the excess or umbrella policies if you want additional limits or are required to carry additional limits from your owner. But it's the same thing. You have a kind of a per project and a total maximum throughout the current program year.
What happens if you have a project? Let's say you have a limit of $5 million
Mhm.
for example per project
Yep.
with a $10 million aggregate.
Mhm.
You have your project, starts off maybe 4.5.
Mhm.
Okay, we're all set. Bond goes through, pre-approved. We start the project. Change orders start rolling in. The client wants to do
Mhm.
more work. Things happen, and even at the end, once you kind of give back or reduce the contract value by whatever work was not completed, because
Mhm.
we everything's an estimate in restoration.
Mhm.
What happens if that work ends up being at the end of the project greater than the 5 million
Yeah.
per occurrence?
Well, just similar to the insurance companies, the bond companies actual will audit, if you will, or true up your exposure. So if you did more or if you did less, maybe, which barely happens in construction, but if the contract final price was more than the initial estimated price when the bond was issued, they will charge you the difference and you have your rates associated with it. So you know exactly if you're going to be going over, and we always recommend that if there's large change orders coming, put in the cost of the bond and, the payment and performance bond in that change order, because that is a cost addition to based off of the contract amount.
Right.
So they're going to true you up at the end of the year. Actually, right now, funny enough, we're going through a client that we're going back a couple of projects and truing up their exposure because the bond company has asked us for final, contract amount for a project, and we're going
Mhm.
making sure that all the last, projects that they've done are being trued up, because they may have had, some reductions in that contract amount, but they're going to true up the exposure at the end of the project when it's finished, to make sure they charge you the right amount. And if there's a return that has to be given because it was a lesser amount, then of course they'll do that as well.
Okay. Oh, so there it goes both ways.
Yeah, it
So
goes
if
both
it's
ways.
below,
Yeah,
there might be some returns, but if it goes above, then you get charged a little bit more.
correct.
Okay. And so I assume based on like a percentage of however much it went over
Yeah,
or
it's based
under?
off of the actual amount. So let's, if it was 4 million and ended up being 5 million, it's $1 million of difference. You
Mhm.
have your rate for how much your bond costs. You can do the cost difference. You multiply the rate times the additional, amount of that
Right,
contract,
right,
and there you
right.
have your premium.
It's like rate per thousand or something like that?
Yeah, it's very similar to like the insurance side where you have the rates, per $1,000 of construction value, et cetera. So there's no, as long as you know what your rates are, you can do your math and say, okay, for this change order, I do have to add X amount of my P&P bond cost. Could
Mm.
be $10,000 due to the increase in the change order.
Got it. So for most people who aren't running a construction company or aren't dealing with, who aren't an association,
Mhm,
when we go out and get any kind of insurance, liability, whatever on vehicles, auto insurance,
mhm,
home insurance, well, usually vehicle insurance, it's like you talk directly to the insurance company, Progressive, Geico, whoever, you
mhm.
talk to them, USA. But is that something that sometimes happens with like surety or, just commercial insurance? Do you see contractors going directly to the insurance, or is it usually through a broker?
So most of it's through a broker. You have very minimal, and it's like you mentioned, it's more common with auto insurance companies. And the reason why is any commercial, which is a business
Mhm.
auto insurance company. And it's very interesting because, like Progressive, you mentioned, for example, they do have a personal insurance component or division, and they have a commercial division. And in their commercial division, they have a division where it's you can have the policyholder of the business be straight with them, or you can have the agent or broker involved. So most of the carriers require a broker to be involved. The reason why is they want to deal with someone that is licensed, is a professional that understands the business, and not someone that's not real. They rely on the agent and broker to be that consultant to explain to the customer, to the contractor, hey, this is how the insurance works, or this is how the bonding works. They won't just let someone go directly. Now, again, as I mentioned, we want to create, especially on the bonding side, that direct access to your surety underwriter, because we want them to know exactly what your plans are for the future so they can start getting prepared for what we have to do if, let's say, it is increasing your line.
Mhm.
What is going to have to be done to get you to that increase of line to get you to be able to then bid on those larger jobs.
Right.
So we still want to create that partnership or symmetric relationship between our contractors and customers with their companies. And even, like, for example, we've had scenarios where we may have a client say, hey, we'd like to just have the workers compensation company come out and do a quick review, a safety review for us to see we're doing things the right way. That's risk management. You're trying to manage your risks. You're trying to prevent a claim from happening.
Got it.
And all the, most of the insurance companies, the ones that we work with at least, will provide you those resources so you're able to have the best
Yeah,
experience.
because
And
they don't wanna go through a claim either.
correct. I mean, how they see it, it's a proactive approach. If you're doing the right things and you're reaching out, what else can I do to improve? They're gonna have a better chance to not, pay claims. And as we know, there are programs that we have in place, like for PG restoration, that, like, for example, on the workers' compensation, depending on your performance, you get dividend returns back to you at the end of the year. So it's a win-win for everyone. And at the end of the day, I think most contractors, aside of, of course, the pricing is important, but they want to maintain a safe,
Of
environment for
course.
their employees. They want everyone to go home at the end of the day to their families, and they want the part to be completed as fast as possible and as good as, as with everything done. And and not have any problems. And safety is always a priority for most of the contractors.
Oh, 100%, yeah. It's a good record to have. Good safety
Yeah.
record to have is very important. I think new things always come out. Like, I
Hmm.
remember it was a couple years ago that came out that, silica dust was a big factor
Yep.
in lung cancer.
Yep.
So now they doubled down on, what kind of respirators you can use, the masks you had to use, the dust control.
Hmm.
So now everybody's selling, vacuums with HEPA filters just to kinda mitigate that risk as much as possible.
Yeah.
It's very interesting. I had a question. So we went over the regulatory aspects
Hmm.
of it. You are required either if you're in a public work by the law, or if you're working with a private on the private sector, just by the owner, or maybe sometimes even the engineer.
Hmm.
So besides just meeting regulations, why is it important for a contractor to have the best insurance that they can possibly get their hands on, the best coverage,
Yeah.
the highest liability amount, maybe even umbrella? Why is it important to have that?
So I would say and this is the point, that you have scenarios where we are all risk bearers in terms of the insurance company's a risk bearer, the contractor's a risk bearer, and you have to know what risk you bear
Hmm.
as the contractor and what risk you are paying the insurance company to bear as a contractor. Because what no one wants to find out is at the time of a claim, oh, I wasn't covered for this. Well, did your agent tell you that you had so and so exclusion on your policy that wouldn't provide you coverage for this? And some people may say, yeah, I didn't want to pay an extra X amount to insure, so I wanted to, to basically retain that exposure and that risk and say, hey, look, I'll take a risk. I'm going to save X amount every year. I don't purchase that. But at the end of the day, that's part of our initial process. When we start working with the contractor, we want to do a deep dive into their insurance policies and program and go through all the fine print, go through all the forms, coverages, endorsements, exclusions, and say, okay, were you aware of this? If you are and you're okay with the risk, no problem. By the way, here's an option if you like to put
Hmm.
this risk on the insurance company. Here's what the cost is. And sometimes, by the way, there's no cost because insurance companies are, and that's when it's important to work with someone that understands it. Insurance companies are trying to transfer risk over to the policyholder because they're in the business to make money as well, right? And it's the agent's job, the broker, the consultant's job to tell them, well, no, this is a problem and we can't have it on the policy, this exclusion. And sometimes they remove it with no additional premium. Sometimes it costs us money to add that coverage, and we'll tell the customer, hey, they're not going to cover this. Do you want to purchase a coverage? Yes or no? If the answer is no, again, the contractor knows what they're exposed to and what risk they're bearing versus the insurance company bearing the risk for the premium charge. And that's how we look at it is, we don't make decisions for our clients. We bring to their attention the items, give them the options, and then they decide what's best for their organization. They ask us for recommendation. That's what we're here for as a consultant, to recommend, what they should do. At the end of the day, the owners sign the checks and they make that decision.
Of
But
course.
we need to be as proactive, transparent as possible, so the customer knows exactly what risk they're bearing and what risk the insurance company is bearing that they're paying a premium for.
Right. So it's best for the contractors to think of their broker as not as a middleman, but as your advisor
Yep.
to your insurance policy. What you should be worried about, what you should be taking risk on, what you shouldn't be taking risk on, how you can best, prepare yourself to grow, how you can best work with your insurance, with your surety to make sure that you're covered for everything that you need to be covered on your line of work.
You could not have said it better. I like to tell, and the thing is, there's so many, again, insurance agents out there. And I like to tell, my customers, I do not want to be a vendor. Do I provide you your general liability, your umbrella, your workers' compensation, your bonding, et cetera, equipment? Yes, but I'm a consultant. I'm here to help you. I'm here to grow with you. And I'll tell you from a personal experience with PG, I've seen the growth of the company and we've grown together really. And I've seen that growth, and it's very special to go and work with companies that are growing, and you're a part of that process. You're not just a vendor. You're not just, someone that I got to buy the insurance. Oh, well, here's, you're now a consultant. You're someone that is trusted. You're someone that is, goes to some of the holiday parties.
Yeah.
Like,
Yeah.
you're now in a different level of a vendor versus a real partner. And that's what we want our clients to see in us. And that's why we do things different. We do a lot more, in terms of when you go into the contract analysis and the insurance requirement reviews. Not many of the kind of normal agents may do that. But again, we need to show our client why it's important and why we're a partner, not just a vendor for them.
I'd like to ask you one last
Sure.
question. If I'm a contractor, new contractor scene, I'm looking for a broker. What are some things that I should look for to choose the correct broker? What are some qualities that you want to look for?
Yeah. I'm going to say, and this is in general, you should choose a broker and not shop, if you will, for brokers. So, what I recommend is you interview, you have a meeting with different brokers and agents, and you ask them, it depends on what, you could be in new construction, you could be in restoration, you can be in, and for that matter, any business, you can be a supplier, you could be a distributor, you're opening up your own up. Go out, interview, have a meeting with different brokers that were recommended or something, and see who is the best qualified for your business. And then once you find, okay, this is the one that I want to work with because XYZ, the other ones were just maybe more, price driven. And it depends too, because every business is at a different stage in their lives. And
Right.
sometimes when you're trying to grow, the most important thing is keeping the cost as low as possible because you're putting in so much money. But at the end of the day, the insurance should not be looked at. And it's interesting because in the construction side, guess what happens when an owner, they go out to bid and they send out to multiple contractors. That's not how insurance works. The insurance agents and brokers, most of us have the same carriers, insurance companies that we work with.
Hmm.
And our job is to get as many options as possible that are competitive for your operations and negotiate the best possible option. But the first and most important thing is selecting who's the most qualified broker to handle that process for you. And once you find that, you let that person take it, and bring you those options and tell you what the differences are, upon your renewals, and same thing for your surety program.
Thank you very much, Claudio. Thank you for being with us here.
My pleasure.
Thank you all for watching. Tune in next time, and we're always going to keep covering any kind of aspect of this industry and bringing experts who have the knowledge. So, thank you all for watching. And any comments, any questions, please leave them below.
Yeah. Thanks for having me.